Our topic is diversify your stocks portfolio with futures. We have 2 sessions for tonight. The first 1 hour, our speaker will present her presentation slide, and the next 1.5 hours, we will pick some Q&A question from the Q&A box. This event is brought to you by Bursa Malaysia. I'm the moderator, Junior Low, for this webinar. Before we start, please check your speaker. If you cannot hear us, please follow the step below. It will solve your problem. And also, please turn off your video due to the network is not that strong to support. Okay, thank you. Please turn off your video. If you have any question along the way during the presentation, please put your question in Q&A box. So, for your information, we will only pick the question from the Q&A box. So please don't put your question in the chat room. Okay? So to open up the Q&A box, first click this 3 dots button, then select Q&A and select all co-hosts. You must select this all co-hosts so we can see your question. Okay? This LLF webinar series is in series. We will conduct in 3 languages, English, Malay, and Mandarin, every Tuesday. So you can see here got plenty of topics, English, Bahasa Malay, and Mandarin. You can just scan the QR code at the right side to register. Okay? You can scan here to register. We also have online workshop for beginners. We will conduct this online workshop in English Saturday and Sunday. For April, we will start from 9:30 a.m. to 12:30 p.m. For May, we will start from 2 p.m. to 5 p.m. You can scan here to register this QR code to register. For your information, this is only limited to the first 50 online attendees. So first come, first serve. Before we start, let's go through a little bit background of our speaker. Chong Ting Ting, founder and managing director of Excellent, a best-selling author. She is former head of futures dealing in M Futures, former head of advisory in e-broking, M Investment Bank Berhad, CPE speaker for SIDC, author of Jumpstart in Stock and Futures Trading. You can find this book in MPH or you can just order it from MPH. A listed company speaker. She also passed all the modules required to be licensed in both equity and futures. Okay, so are you ready to welcome our so experienced speaker? Okay, all right. Now I will pass the control to Ting Ting. Ting Ting, are you ready?
Okay, I'm ready. Let me get the control first.
Okay.
Then I'll be sharing the slide. Give me a sec. Okay, good evening, everyone. I believe you can see my slides. Am I correct? Now, before I start, I would like to do a disclaimer. The session for today is only meant for education purposes only. There's no buy or sell call, because along the way, we are going to give some example based on the current market situation, but there's no buy or sell call. Now, I don't need to introduce about myself because just now our moderators already introduced about me. Now, before I start, I would like to do a quick survey. How many of you are currently trading in futures? If you are currently trading in futures, can you please type in the chat box, yes? If you are not currently trading in futures, you just type in the chat box, you just type in no. I repeat my question. How many of you are currently trading in futures? If you are currently trading in futures, can you please type in the chat box yes? If you are not trading in futures, you just type in no. I would like to see how many of you are currently trading in futures and how many of you are not trading in futures. I can see many of you not yet, but we have a few trading in futures right now. Very good, but majority I can see that is no. So I assume that for those who did not answer, you are professional traders. Am I correct? I repeat my statement now. For those who are trading in futures, I suppose that you are typing in yes. If you not yet start in futures trading, you type in no. For those who did not answer me, I suppose you are a professional trader. So I'm not quite sure whether this is suitable for you or not, because we are going to start with beginners class. We're going to start from the first step, and subsequently you can see that we have a series of webinars and to cater for those intermediate and for advanced class as well, which we are later we are going to cover this. Now let's start with the session. Now the topic for today, I'm going to divide it into 5 different sections. The first session, we are going to cover about what is futures, exactly for those who do not have background in futures trading. Second session, we are going to cover about benefit of futures trading. What are the benefits in futures trading? And the third one, we are going to cover the profit and loss calculation, which is the most important part. You need to understand how to calculate your profit and loss. And the fourth session, we are going to cover about diversification. This is the most important topic among the 5 sessions, which is how do you diversify your stock portfolio using futures. And the final session, we are going to talk about winning trading psychology in futures trading. Now, whether trading psychology is it important in futures trading or not, and whether is it at the beginning of the stage, is it so important or not? Is there anything to replace trading psychology? Because when it comes to trading, right, many of us, we wonder that, it seems like trading psychologies is affecting us. It might not be our trading strategies, it might not be our trading tools, but whether how much trading psychologies is affecting our trading or our futures trading performance, later I'm going to let you know. So session 4 and session 5 is relatively more important. Session 1 to session 3, we are going to run through some basics for those who do not have any background. Now, the first session, what is exactly this? Now, before I start, I'd like to check you, how many of you are from Klang Valley? If you are from Klang Valley, just type in KL or Selangor, any states that you are from. For the rest of the states, you can also type in the chat box. For example, you're from Penang, you're from JB, Sabah, which state you're. Now I can see that many is from KL, Klang Valley, Selangor. Skudai, oh, very good. Welcome from Skudai, those Sabah. Okay, for from this building, am I correct? I don't need to repeat to ask, am I correct? For those from others, might not really know what is this building. Now, this is our Bursa Malaysia, which is the one and only exchange in Malaysia. Because futures technically is just another product under Bursa Malaysia. So technically, Malaysia, if you're going to trade any products listed, you need to trade under Bursa Malaysia. If you are trading, make sure that whatever products that you are trading, it is legal in Malaysia. Now, before I start with futures, the first concept that you need to understand before understanding what is futures trading, you need to understand what is derivative. Now, many of you will find that derivative is very difficult. Am I correct? Many of you find that, it seems like very difficult for you to understand what is derivative. Is it that difficult? I'm not quite sure. How many of you find that very difficult to understand what is derivative or what is futures? If you find that it's difficult, you just type in the chat box. Yes, very difficult. But you will be very surprised. Actually, in futures tradings, right, there's only a few terminologies, which is what we call as jargon. But once you understand this all jargon, right, you will find that futures is very easy compared to the rest of the products. Even it is more easy compared to your stocks. I repeat my statements are, you will verify this statement whether that I'm speaking it correctly or not. At the end of the session, you'll find that futures is actually more simple or more easy compared to the rest of the products. Derivative itself is a jargon, but if you really try to understand this word, I'm going to explain in a layman terms. For example, where we derive from. Any one of you can answer where we derive from. Definitely, you're going to answer me. You can't. Technically, you can't derive from an egg. Am I correct? We derive from our parents. Now, without our parents, we are nobody. Am I correct? So technically, as a layman terms, is we derive from our parents. We are the derivative products, and our parents, they are the underlying products. Now, right now, at this moment, you'll find that it is very difficult for you to understand, but don't worry, along the way, you will definitely understand what is derivative. Now, I repeat the statement as a layman terms. We derive from our parents. So our parents, they are the underlying products. We are the derivative products. So let's say, for example, if let's say your parents, they are very hot-tempered, we tend to be very hot-tempered as well. Like for example, for me, my parents, they're hot-tempered, more or less I'm hot-tempered as well. So without our parents, we are nobody, and we will inherit some of their characteristics, or we will inherit some of their so-called as habit as well. So this is the terms called derivative. Along the way, I will explain to you. Now, once you understand what is derivative, the next things you can understand what is futures. Why? First thing, futures is one of the instruments under derivative itself. So 4 common derivative instruments, we have futures contracts, we have forward contracts, we have option contract, we have swap contract. But for this series of webinar, Let's Learn Futures webinar, the title itself, Let's Learn Futures, we are going to cover only one product, which is futures contract. So the whole thing, we're going to cover about futures contract. In Malaysia, we have futures contract, we have option contract as well. But for this series purposes, we are going to cover only futures contract. Now, what is exactly a futures? Now, before you really need to understand what is futures, you need to understand these 5 areas. I repeat, before you understand what is futures, you try to understand these 5 areas, then you definitely will understand what is futures. The first one is the definition of the futures. The second one is the terminologies. As you understand, in this particular industry, we have a lot of jargons, but trust me, less than 10. Once you understand these 10 terminologies, the rest of it is very simple for you. Now, the third one is product available. What are the products available under Bursa Malaysia? You can trade which products that you can trade. The fourth is the underlying market. Remember just now I mentioned to you, because futures is a derivative product, it derived from the underlying market. So this underlying market is our parents. We are the derivative products, which is the futures itself as a kids. Now, the last one is the contract specification. Now, you might find that contract specification itself is another jargon, but don't worry, this contract specification, layman terms, is like your user manual. For example, let's say today I bought a new iPhone. I do not know how to use the iPhone. What can I do? So I go and check the user manual. Am I correct? Even you go through YouTube. Let's say you go through YouTube, right? When you go through the YouTube, also they went and read the contract specification for you, the user manual for you. So when it comes to futures, first thing, if you do not understand what is the futures products all about, first thing you go and check the contract specification. But one thing, very good news for you is, on average, our contract specification is only about half a page of A4 size. The most, not more than one A4 size. Normally, all the user manual, they are very lengthy, but for futures products itself, the contract specification, especially in Malaysia context, we are only about half a page of A4 size. Very good news, right? Later, I'm going to show you one of the example of this contract specification. Now, let's define what is futures itself. Now, it's not Back to the Futures. I'm not quite sure how many of you really watched before this Back to the Futures. But futures itself, I'm going to explain to you in a layman terms, not from academic perspective. If coming from academic perspective, you're going to see a very lengthy explanation. But futures as simple as your forecast towards a product, the futures price of a product. I repeat, your forecast towards a futures price of a particular product. That's it. Later, I'm going to show it to you. How do you buy? How do you sell? How do you calculate? And how do you use your futures to diversify your stock portfolio and we are going to end the session with the trading psychologies in futures trading. Now, terminologies, jargon, commonly used term in the industry. Now, these are all the commonly used terms. Once you understand these 5, technically, the rest is not that difficult. Can you see that normally, if you are going to buy a stocks or sell a stocks, you're using the terms called buy and sell. But in futures industry, we are using long and short. A bit glamour, am I correct? So technically, you can also use buy and sell, no issue. So I can suggest you that right now is technically is after MCO. Right now, most of the states we are in CMCO, half of it is in RMCO. So some of you, you're already going out to have, let's say, a coffee break or dinner with your friends. Am I correct? Although I don't really encourage that, but let's say, for example, you went out and you are going to have a coffee with your friends, then you tell your friends, you say, hey, tomorrow, I'm going to long 10 FKLI at this price. Trust me, your friends is going to look at you and they are going to admire you. You know why? Because they cannot understand what you're trying to say. And as a Malaysian, when we cannot understand what the person is trying to convey to us, we thought that the person is very knowledgeable. Am I correct or not? So, but actually, when we explain things, we try to explain in a layman term so that people can understand. That's the most important thing. So first, you need to understand long in our industry, we call it as buy, and short is equivalent to sell. Now, for futures, you need to pay a deposit. You don't need to pay a full sum, but you need to pay a deposit, which is what we call as a margin for you to own one contract. Later, I'm going to show you the example. Now, for futures, it will expire. When it expired, they have 2 ways to settle. What does this mean? For example, imagine, try to imagine with me. Let's say, for example, today you go into a restaurant. After eating, you are going to settle your bill. Am I correct? When you settle your bill, they have a few ways for you to settle the bill right now. For example, you can pay by cash, you can pay by credit card, you can pay by e-wallet. So you have different ways to settle the bill. For futures, when the contract expired, there are 2 ways for you to settle the contract. One is cash settlement, one is physical delivery. Now, the cash settlement is relatively easy. Any different, you pay by cash. But for physical delivery, a bit difficult. You need to deliver or you need to get delivered the physical goods. For example, in Malaysia, we have crude palm oil. So be careful about this or else 25 metric tons of crude palm oil is going to send to your house. And I'm not quite sure upcoming 10 years, you're going to pour into your swimming pool and start to swim, or you're going to use it as your cooking oil. But just a joke, technically, they are not going to send to your house. They are going to send to the port only. So these are all the terminologies. Now, products available. Can you see that under Bursa Malaysia Derivative, we have many products available? Mainly, there are 2 products mostly traded by retail. Can you see that those highlighted? These 2, one is CPO futures, crude palm oil futures, another one is FBM KLCI futures. So this is your index futures. These are the 2 commonly traded by retail investor or retail traders. We even have option as well. But we are going to cover these 2, mainly these 2 for the whole series of futures webinar. Now, the underlying market, remember, this is us as a kids. This is our parents. We need to know who is our parents, because our parents will affect us. How the parents move will affect the kids. I repeat, we need to know who is our parents, because how the parents react will affect our futures products as well. So the prices in underlying products will affect the futures products. So some example of the products, the underlying, just look at the bracket, those in brackets. So we have FBM KLCI for the underlying products. Then we have FKI as a futures products. Then, for example, another one is the crude palm oil. So crude palm oil is the underlying products, those who transacted outside. And in our futures market, we have crude palm oil futures as well. Now, any products can be a futures products. It's just that in Malaysia, technically, these are the 2 products that commonly traded by retail. Let's say, for example, right now, worldwide, we even have weather futures. We even have orange juice futures. Then let's say, for example, one day iPhone is very common. Many people going after iPhone, then maybe we have even iPhone futures as well. So any products can be converted and become a futures products as well. Now, this is the underlying. These are all the underlying. Can you see? So we have the underlying for FKI is the FBM KLCI, the 30 stocks, and for crude palm oil, the underlying for crude palm oil futures, the underlying is crude palm oil. Those transacted outside. Now this is the actual market, actual screenshot for the trading platform. You can see that this is our FBM KLCI. So this is what we call it as the underlying, the parents. So the 30 stocks, then this is our FKLI. So this is our futures. This is exactly what's happening in the futures market. And once you see, you will understand. When you trade, it's quite easy. Trust me, when it comes to futures trading compared to stocks, they are more easy in many angles. Later, I'm going to share it with you. Now, contract specification, the last one that we need to understand about futures itself is the contract specification. As I mentioned to you, contract specification as a layman term is like your user manual. So if you would like to understand what is the futures itself, first thing, take the contract specification and start to read the contract specification. For example, let's say in future you're going to trade in other market, the foreign futures. First thing, go and check their contract specification. Now, in Malaysia, where can you get the contract specification? You just go to bursa.malaysia.com, and subsequently you go to trade, and the third one, you just go to derivative. I repeat, you just go to bursa.malaysia.com, you go to trade, you go to derivative, then you can see all the products listed under Bursa Malaysia derivative. You can go and check for the contract specification, and the contract specification available in 3 different languages, from Malay, Chinese, and Malay in Mandarin, and also English version. You can check it out. Now I'm going to show you one example, FCPO, the most traded products in Malaysia by retail. And this product itself is a Shara compliance product as well. Then this is the contract specification. That's it, half a page. And it's less than half a page technically. So some of the important things that we need to highlight, for example, the contract code, in short, we call it FCPO. So we add the F in front, so it's futures. So crude palm oil futures, FCPO. Then the parents is crude palm oil. Can you see that? The next things that you need to understand is the contract size. So every contract size for this FCPO is equivalent to 25 metric tons. I'm not quite sure whether you know how heavy is 25 metric tons or not. Let's say if I'm going to convert to some things that is easier for you to understand, like kg, kilogram. Any one of you know that 25 metric tons equivalents to how many kg or not? If you know, please type in the chat box. Any one of you? Wow, very good. The first one, Wu Song. I hope that I read your name correctly. Yes, correct. It's 25,000 metric tons. It's 25,000 kg. It's very heavy, right? You just imagine it's going to deliver to your house, then it's very bad. So this is 25 metric tons, every contract size. And the next thing that you need to know is the minimum price fluctuation is $1. Meaning every time when the market move, for example, right now it's 4,000, then the next price will be 4,001, 4,002, 4,003, 4,004. It cannot be 50 cents. For example, 4,000.5, 4,000, 4,001.5. It cannot be. Every time when the market move, it will move by 1 ringgit Malaysia per metric tons. So what does this do means? I'm going to show it to you. So let's say this is the actual trading platform. So you can see that this is the last transacted price. Let's say, for example, if I'm going to calculate the full contract value of this FCPO, how do I calculate? Very simple. So first thing, I need to take out the 3752. Can you see that? Then I need to times with the contract size, which is the 25 metric tons. Then I need to times with RM1. So each contract values is equivalent to 93,000. But I don't need to pay this 93,000 to own one FCPO contract. Right now, I just need to pay a deposit of 5,500 to own one 93,000 worth of contract. But right now, our CPO price today is closing above 3,009. Previously, we break above 4,000. So this is relatively slightly low. So this is the whole contract value. Can you see that? So we just need to times with 25 metric tons, then we times with RM1. This is the whole contract value, the worth of it, the value. Now, the rest of the contract specification, the next is most important is the contract months. Now, what are these contract months? Contract months meaning that those contracts available for you to trade. Now, for example, for FKR, they only have 4 contract months available for you to trade. And for FCPO, they have more because there are a lot of hedges. There are many hedges in the industry. That's why you can see that many contracts available for you to trade. You can trade up to 3 years ahead. But normally you don't trade those so far. Later, I'm going to share with you as a retail traders, which month you should trade. So can you see the contract months I define for you? Spot month. Spot month meaning is the current month, then the next 11 succeeding month, and thereafter alternate months up to 36 months ahead. So these alternate months meaning that January, March, May, July, September, November. I repeat, so those alternate months, your January, March, etc. So which month you are going to trade later, I'm going to share with you. Now, for example, if today is the 1st of March 2021, so what are the contract months available? According to your contract specification, we have spot month and 11 succeeding month. Am I correct? So spot month is the current month, which is the March. Then 11 succeeding month, you have April, May, June, July, August, September, October, November, December. You have many months. I can't even list it here. So we have many months that are available for you to trade. So let us see, this is the actual trading platform. Can you see that or not? So I screenshot on the 1st of March. So you can see that the spot month is your March when it is on 1st of March. Then your next month is April. Then your subsequent month is May. So there's only one month that you can trade. Do you know which month or not? I repeat my statement. Guess and see which month you should trade if today is 1st of March. Any one of you, if you know the answer, you can type in the chat box. I want to see whether you can guess it correctly or not. If it's wrong, it's okay. Don't worry because you are still in the learning curve. Guess and see which one you should trade. You don't need to give me a reason. You can simply choose. Or some of you, some more give me the reason. Very good, Akmal. May, some of you highlighted June. I know for those who are highlighting the June, I know why you are selecting June. Now, so for example, in this case, right, as a retail traders, normally we trade the 3rd month. So the rest is none of your business. If you do not want to memorize, you just need to remember, go for the highest volume, you will not be too wrong. So I repeat my statement, you just trade the 3rd month. If you do not know which month to trade, you don't need to memorize. I don't like people to memorize things, especially comes to trading. You just need to select the highest volume month. You trade that particular month, you will not be too wrong. So if you can understand, when the volume is high, meaning the liquidity is high as well. So when you buy, you enter the market and you exit from the market, it's very easy for you to enter and exit from the market. So don't memorize, you just choose the highest volume month and you trade for that particular month, you will not be too wrong. So the answer is May if today is 1st of March. Now, the last thing that you need to understand is the trading hours. The trading hours for FCPO start at 10:30. This is definitely very good for those who cannot wake up early in the morning. This product is definitely for you. For those, some of you complain that stock market is too early. So for trading, this FCPO is start at 10:30 in the morning. So if you cannot wake up, this is definitely for you. 10:30 to 12:30 for first session. Second session will be 2:30 until 6 p.m. Now, this is the contract specification. The one thing that I would like to highlight, the 3rd month is the month that you are going to trade. At the same time, this is what we call it as a benchmark month as well. So for example, if we do not highlight what is the month, the contract months, and we only mention the price, technically we are referring to the most active contract months, or what we call it as the benchmark month. You can see that many research report, even in your stocks, right, if they are referring to the benchmark, to futures contract prices, they are referring to this benchmark month. Just for information. Now, moving into the second topic, which is the benefit of futures trading. Try to understand what are the benefit trading in futures. The first one is simple and easy. I'm going to run through this particular topic because we have last 2 topics that are the most important topic. Now, The advantage is simple and easy. Now, compared to your stock, for example, why I'm saying this? Now, your stock market in total, we have more than 1,700 plus the stock included all your warrants. But in futures, technically, we have only 2 counters. I repeat, in futures, technically, you did not hear it wrongly. Technically, we have only 2 counters, which is one is FKI, one is FCPO. So every day you only have 4 decisions to make. Either you buy FKI or you sell FKI, either you buy FCPO or else you sell FCPO. So four decisions only. So comparison to your stock market, etc., is relatively easier. And in terms of analysis, compared to your stock, also relatively easier. For example, sometimes stocks, you don't even know which stocks to buy. Am I correct? So many stocks, so you tend to ask people, hey, which stocks to buy? And you tend to go and follow rumors, which might not be correct. So this is simple and easy and easier for you to understand as well. Now, the second advantage is higher liquidity. As you understand, liquidity is very important. You can see that in Malaysian market, especially for FKI and FCPO, liquidity so far is not an issue at all. Sometimes for your stocks, you will face with the issue of you can't get out from the market, especially when the market so-called as crash in a way. But for futures, because you have both ways that you can do, you can buy, you can sell. That's why the liquidity is there. Even if you believe that the market is going to drop because of the holding period that is different, the liquidity will be there. Because some of them, they hold for 1 second. Some of them, they hold for 1 minute. Some of them, they hold for 1 hour. Some of them, they hold for 1 year. Because of that, your buying and selling will be different opinion. So when it comes to futures, right, there's no limitation. You can hold as short as 1 second, 1 minute, 1 hour, 1 day, 1 month. You can hold as long as you want as well. For example, 1 month, 2 months, 3 months, or anything more than that as you like. Now, the third advantage is leverage. This might be another jargon for you, but leverage is very easy for you to understand. Look at this particular image, then you can understand very clearly. Can you see that this is not a Bitcoin? If, for example, if you deposit a coin, then there's an opportunity for you to make many coins. Can you see that? So it's a leverage concept. So you use a small sum of amount of money, you can make a return way higher than that, the leverage. Remember just now I showed you the example of crude palm oil. The whole contract values is equivalent to 93,000. But technically, I just need to pay 5,500 to own the 93,000 worth value. So you're using a small amount of money, there's a chance for you to make a huge return. But remember, vice versa, the other way. Now, this is one of the leverage example. Let's say, can you see this FBM KLCI 1566? So for FKI, every 1 point is equivalent to RM50. I repeat, along the way, along the webinars, we'll cover different products, then you'll understand better. So let's say, for example, for FKI, every 1 point is equivalent to Ringgit Malaysia 50. So let's say if I'm going to calculate the whole contract value, so assuming right now FKI is also trading at 1566, times with 50 Ringgit Malaysia, because this is FKI, then this contract value is equivalent to 78,000. But right now, if you are going to trade one contract of FKI, you just need to pay a deposit or what we call as margin of 4,200 only. So it's relatively a small sum of money. Can you see the comparison? So this is what we call as a leverage. Now, the advantage, the fourth, is you can profit in both bull and bear market. I believe for those in stock market, you can't do that technically, especially right now, you can't go with IDSS. So it's very different, but futures, you can buy, you can sell as well. You don't need to borrow anything. I repeat, later I'm going to show you the example. You can buy, you can sell, you don't need to borrow anything. You can start by selling the market. If you believe that the market is going to drop, you can start by selling the market. Now, this actually happened in Malaysia market. Can you see that last year? So you can see that this particular downtrend in less than 2 months, KLCI actually dropped 390 points. And in less than 3 months, KLCS subsequently rebounded. Can you see that is 380 points. So if you're going to take both side direction, then every 1 point you're going to times with 50 Ringgit Malaysia, then you can see the difference. And the same thing, especially in stock market, you can't short, but for futures, you can sell. You can start by selling. You don't need to borrow anything. If you anticipate the market is going to drop, you just need to sell a contract. Subsequently, when the market drop, then you can buy back at a lower level and you can profit from that particular contract itself. So can you see less than 2 months, KLCR dropped 390 points, which is equivalent to 25%. And this is also proven to you that this is officially in the bear market. So 390 points then is times with Ringgit Malaysia 50, which is equivalent to 19,000. This is only one contract. Oh. In less than 2 months' time, there's a chance for you to make 19,000 for one contract only. Then this is FCPO, both direction as well. Can you see that this is 2020 downward trading? Less than 4 months, FCPO dropped 1,200 points, and every 1 point is equivalent to RM25. So this particular drop is 30,000. And in less than 8 months' time, FCPO actually rebounded 1,950 points. You just calculate by yourself. I don't think I need to explain. So the advantage for futures is both direction also you can trade. Unlike certain products, you can only trade one direction. So this is the beauty of futures itself. Now, stock versus index. Some of you, especially girls, you are facing with selection phobia. Am I correct? If you ask you, hey, go and buy one of the stock out of the 30 counters, right? You tend to come back and ask me, hey, which stocks to buy? Or even worse, if you're going to select 10 stock out of the 1,800 stocks, it's even more difficult for you. So relatively, you can select either not to go for the 30 stocks that which you need to select, or else I don't think that you have the capitals to buy all the 30 stocks. Another option is you can buy one contract FKI, which is going to replace the 30 stocks. So that's one of the options. Another thing, for example, rather than you are going to buy a plantation sector stocks, in Malaysia, we have about 40 plus counters of plantation sectors. In plantation sectors itself, we are more than about 40 plus counters, if I'm not mistaken. So rather that if you're going to select which counter to buy, especially recently, today itself, many of the plantation sectors counters, they really boom. But rather that you're going to select which stocks to buy, you can replace, for example, with FCPO as well. So there are certain things that you can do, which is an easier way. That's why I say that once you understand all the jargon in the industry, you'll find that futures actually compared to your stocks, it is relatively easy. You will like futures subsequently, trust me. Now, the third session is about profit and loss calculation. The most important part, you need to understand how to calculate your profit and loss. But before that, we need to know when to buy and when to sell. Now, the concept is very simple. Bullish or uptrend, you long. Bearish or downtrend, you short. And the concept is buy low, sell high. A common things that we can understand: buy low, sell high, or sell high, buy low. Now, look at this. Let's say if I open a position by buying, subsequently, how do I close the position? I just need to sell. Now, let's say, if I start by selling a position, then subsequently, how do I close the position? I will need to buy a contract. That's it. You don't need to borrow anything, I repeat. So look at this diagram. It's easier for you to understand. Let's say at this particular point, if you anticipate the market is going to go higher, you buy at this particular level, and subsequently when the market went up, you can close your position and you can take profit. Now the same thing, if right now the market is at the high, at the peak, and you believe that the market is going to drop, or you anticipate the market is going to drop, you can start by selling a contract, and subsequently when the market drop, then you can buy back at a later stage, then you can profit from it. Now I'm going to test you. Let's say, for example, CPO production announced is lower than expected. Should you buy or should you sell FCPO? You just need to type in the chat box whether should you buy or should you sell a FCPO contract. Now, from this perspective, how do you analyze is you can analyze from the concept of demand and supply. I repeat, you can analyze from the concept of demand and supply. So if CPO production announced is lower, meaning what? Your supply is lower. So when your supply is lower, your price should be higher or lower. I can see that many of you already put your answer in. Very good. All the answer is correct. The rest you can try to answer as well. Now, the answer is correct. You will need to buy FCPO because production announced is lower, meaning your supply is lower. So when your supply is lower, technically you anticipate that the price is going to go higher. It's like very simple. For example, in China, their girls tends to be less than their guys. So you see the demand for the girls is higher. So this is one example for you to understand. Then, for example, for your iPhone, many people chasing after the iPhone, that the price will be higher. So this is some things that you can understand. Now I'm going to test you the second question. So if stocks expected to increase, this stocks is not your share. This stocks is your inventory. Inventory in your crude palm oil expected to increase. Should you buy or sell FCPO? Okay, you just need to type in the chat box. I can see someone very interesting keep. I like that. This is a very unique answer that I can see. So majority of you answer, I can see that the answer is sell. Yes, your stock expected to increase, meaning your supply is high. So when your supply is higher than your demand, your FCPO tends to drop. So you can sell right now, subsequently when the market drop, then you can buy back. So it's very simple, am I correct? No, when it comes to futures trading, this is the actual trading platform. Can you see that? It's more or less similar to your stock. But it's just that they don't have much counter for you to select, don't have much products for you to select as well. So buy and sell more or less the same, and it's very similar to your stock market. You can, but it's just the only things is very different is you can start to sell a contract. You don't need to borrow anything. If you believe that the market is going to drop, you can start by selling a futures contract. Now, I'm going to ask you the question, how do you sell a futures contract? Anyone can answer me? How are you going to sell a futures contract? I just wonder how many of you can answer me. Well, some of you is trying to ask me, are you going to ask a correct question or are you joking? So how do you sell a contract? Oh, I like this answer. Contact my agent. Nowadays, especially for futures market, I believe that you do online trading by yourself because going through your brokers, it will take time. So technically, you just need to execute the orders by yourself. So the answer is you just need to click sell. Now, why I ask this question? I ask this question with a reason. Because especially for those in stock market, if you're really long in stock market, you start to ask me this question. Hey, I'm so used to buying stocks. So I start by buying a stock. So right now, if you ask me to start by selling a futures contract, I really cannot understand. But there's the only one answer that I'm going to give it to you is the first contract that if you do not know how to sell, you close your eyes, then you click sell button and you send the orders. And subsequently, you will never ask me this question anymore. Seriously, it looks like it's a joke. It looks like it's a joke, but my answer is correct because you just need to try by selling the first contract, and subsequently you will not face with any issue of selling a futures contract. Now, younger generation, you might not have this issue. For those already long in the market, they tend to have this issue. That's why sometimes when I'm being questioned with this particular question, seriously, I do not know how to answer because especially I'm really long in the market, and I find that it's like breathing. If you ask me how to breathe, it's very difficult for me to answer. Am I correct? And subsequently, I noticed that the only answer for you is you just try by yourself the first contract. Yes, press sell, then subsequently you will find that it's very simple for you. So you just need to press a sell button, then you start by selling. Subsequently, how do you close your position? You just need to press buy and you can close your position. Good to go? Now, along the way, if you have any question, you can type in the Q&A box, and subsequently after this session, we will answer all the questions at once. Because I need to rush through the content first, especially the last two sessions is the most important session. So let me finish this P&L, then we are going to go into the diversification, and we are going to end with the trading psychology in futures trading. Now, again, bullish buy, bearish sell, buy low, sell high. Anything that fulfill buy low, sell high, you're having a profit. Or else you sell high, buy low, also you're having a profit. Anything opposite of this, you are having a loss. That's it. I repeat, anything that you fulfill a buy low, sell high, you're having a profit. Anything opposite of this, you're having a loss. Now look at this. For example, 1st of August, if you sold one FCPO contract at 3,700, and subsequently on 3rd of August, when the market dropped and you find that maybe I already make sufficient, so you bought one FCPO contract to cover your position at the price of 3,650. Now, please let me know what is the profit, what is the loss, and how much. Please let me know whether it's a profit, it's a loss, and how much. I give you 10 seconds to calculate and let me know. Remember, every 1 point is equivalent to 25 ringgit Malaysia for FCPO. First answer came in very fast, Leong Kam Fat. I'm not quite sure whether correct or not. Later, we are going to see. Very good. Many answer is correct. You can see the answer is correct. The calculation is correct as well. You can just try it out and test it out by yourself. Now I'm going to show it to you, the answer. Definitely, you can see in this case, right, you sold at a higher price and subsequently you buy at a lower price. So you are having a profit, definitely. Remember, you sell high, buy low, or you buy low, sell high, you are having a profit. So let us check what should be the profit. So for those who answer 1,250, the answer is definitely correct. Give yourself a big applause. Now you can see that you just take 3,700 minus 3,650 times with 25. Because why? Remember, every one contract is equivalent to 25 metric tons. Remember just now the FCPO contract specification? This all you can get it from your contract specification, which is your user manual. So your profit is 1,250. Now, in the actual training environment, you don't need to calculate by yourself. Then just now you are trying to ask me, why are you asking us to calculate? No, this is for you to prepare yourself when you are going to build your own trading plan, your own trading system. Then you need to really understand how to calculate your own profit and loss. If not, in the actual trading environment, they will auto calculate for you. The system will auto calculate for you. You can see that the system will auto calculate what is your profit, what is your loss, and throughout the day, and it is real time as well. Now, coming to this session 4, diversification. This is the most important topic. Follow with the last topic, trading psychology, is another very important topic as well. I'm going to spend some time for these 2 topics. So what is diversification? This might be another jargon for many of you who really never exposed to investment or trading environment. Now, a layman explanation is like this. For example, if today I walk into a bank, I withdraw a lot of money. Let's say, for example, a huge sum. So normally, would you put all your money into your handbag or not? For me, in my situation, definitely I will not put all the money in my handbag. I need to diversify my risk. In the way the terms is called diversify my risk. So I'm going to spread my risk. So what I do is some I put in my handbag, some I put into my wallet, some I put into my pocket, maybe side pocket, back pocket, front pocket, every pocket I separated. Then some maybe I put into my shoes, for example. So I try to separate out. I try to diversify my risk itself. So let's say, for example, let's say touch wood, I'm being snatched. Then let's say my handbag was being snatched. At least I still have the left behind money. So those in my pocket, in my shoes, I can still use. Am I correct? So this is a simple example of what is diversification. So when it comes to diversification for your stock portfolio, this is something that you need to understand, meaning you need to search for different type of risk so that first thing, you can reduce your risk along the way. Second, you can increase your return or increase your performance. So 2 things that we are looking at when we do diversification. One is to reduce your risk. One is to increase your return. Now, first thing we need to understand about this diversification is about correlation. Now, you will find that there's another jargon. Hi, a lot of sweat, right? Am I correct? But in a layman terms, correlation meaning the relationship. So for example, girls and guys, we are very good relationship. So because we complement each other's, girls' advantages and guys' advantages is very different, especially when it comes to tradings, right? Girls and guys, we have our own strength, different strength and different weaknesses. So we can correlate better. So for example, in our working environment, you also will find that, for example, guys and girls, they tend to work better. Am I correct? I believe many of you experience the same thing. So we are going to search for low correlation because we do not want so close the relationship so that one direction, let's say, for example, if let's say, I'm going to show it to you, if one of the products showing uptrend, I'm going to search for another product that's going different direction, or at least same direction, but slightly lower, the steepness not that high. So the best is searching for one product is going uptrend, the other product is going downtrend. Then in a way, I can have a low correlation that I can diversify my risk in my particular portfolio. Now I'm going to show it to you this particular chart, easier for you to understand. I'm going to show you the first product is for FCPO. Why you need to use your FCPO to diversify your whole portfolio. Then the second one, later I'm going to show you FKLI. So can you see these? For example, the direction of the FBM, KLCI, and FCPO must be different. So for those previously, you need to listen carefully. For those previously, you only focus in stock itself, try to take other products into your stock portfolio. So that's the reason why today I'm going to introduce you different products that you can put into your stock portfolio so that you can diversify your risk in a way. So can you see I'm going to show it to you? For example, in this case that your stock market is flat, technically it's sideways trading. So in stock market, if sideways trading, technically you can't make much, or else some of the stocks you might be losing money, some of the stocks you might be making, but not much that you can make. But compared to your FCPO, can you see that it's totally different things, which is your FCPO is an upward trading market, very obvious upward trading market. So you have different direction. So one is sideways, one is upside, uptrend. So you can, in a way, you can sustain your profit in your portfolio. So for example, here you can't make money, you can make the profit via your FCPO. So one not making money, one making money, then you can, in a way, contra it, and you can continue to make money from your portfolio itself. The whole way, can you see that different direction, many of it? That's why you need to have FCPO in your stock portfolio so that you can diversify. Along the way, many cases you can see, especially here, can you see very obvious downtrend, which you can't make money from the stock market. So at the same time, if you are having your FCPO in your portfolio, which is an uptrend, you can make money. Especially for futures market, you can make both ways. So this is a very obvious uptrend. So while you can't make money in your stock market, you can use FCPO to make money. So this is one of the ways for you to diversify. First, your risk, the second thing as well as your return. So this is some things that you can understand. Can you see? Different direction. So you can benefit from the low correlation between your FBM KLCI and your FCPO. Now, the second thing is that we need to look into it, which is when coming into diversification, is hedging. Now, you definitely say, another jargons. As I promised you, along the way, you can see that I use very simple terms to explain to you. I don't use jargon. So hedging is you are like using futures to protect your stock. Now, I'm going to show it to you how do we hedge. I repeat, hedging is you're using your futures to protect your stocks. It's like you're buying an insurance, not for the purpose of making money, but for the purpose of protecting your stocks only. So until your stocks rebounded, then you close your futures market, then you can continue to make from your stocks. Now, I'm going to show it to you. For example, if my KLCI is going higher, then technically my FKL is going higher as well. Still remember the relationship? This is our parents. This is us as a derivative market, as a kids. So we follow more or less their characters. So if my fathers or my parents, they're hot tempers, more or less I'm hot tempers as well. So FBM KLCI is higher, technically FKLI is higher as well. So let's say if FBM KLCI is lower, so FKI is lower as well. But when the market is going lower, for KLCI, your stock itself, you can't make money because you are holding a buy position in your stock. But for futures, two ways you can do both. You can buy, you can sell. So if I anticipate the market is going to drop, what I can do is I can short FKI. So let's say if my stock, I suffered 2,000 of loss, a small figures. So maybe in my FKI, I can make 2,000 because I sell when the market drop, I'm going to make money. Am I correct? So in this way, you can net off the losses in your stock market. So you can reduce your risk in your whole portfolio. So I repeat, diversification, mainly two things. You can look into having different products into your stock portfolio. So you can diversify the risk in your stocks. At the same time, you can increase your performance as well. So these are the two angles that you can look into it. Now, moving into the last chapter, which is the winning trading psychology in futures trading. Now, before we really talk about winning trading psychology, is it trading psychology is important or not? Now, I just want to ask you all, how many of you find that trading psychology is very important? If you think that it's important, you just type in the chat box yes. If you don't think that it's important, you just type in no. So can you please type in the chat box whether you think that it's important or not? Oh, I can see many is yes, huh? You're going to get a very surprise answer later, but I'm not going to answer you first, but I'm going to see what is your answer. Oh, so far, all yes. Am I correct? Trading psychology is important. Okay. Maybe my question is not clear, so you're not. But some of you say not sure, some of you say no. But trading psychology, whether is it important or not, and it is how important it is. Later, I'm going to explain to you. The first thing, the answer is definitely trading psychology is important. But is there other things that is more important than trading psychology when it comes to futures trading or not? I'm going to show it to you. I repeat, my statements are trading psychology is definitely important, but we are not going to cover about this topic yet because this is a topic by itself. But trading psychology is important, but I am going to show it to you that there are other things that is even more important than this trading psychology. What are they? I'm going to show it to you in a short while. Let's continue with the session. Now I'm going to check with you. Do you think if you want to become a successful futures traders, right? Which one is important? I'm going to repeat my question. If you're going to become a successful futures traders, right, do you think which one is more important? The first one is technical analysis. I believe many of you spend a lot of time learning technical analysis, then fundamental analysis, then we have trading plan, then we have trading psychology. Please tell me which one is more important. There's no right or wrong, don't worry. Only one, please don't tell me all. So if you think that technical analysis is more important, you type in 1. If you think that fundamental analysis is more important, you type in 2. If you think that trading plan is more important, you type in 3. If you think that trading psychology is the most important, you type in 4. There's no right or wrong. You just need to type in your answer. I can see many different answers. 1 to technically 1 to 4 also have, but many at 3. Oh, very good. I can see very different answer. How about the rest? The rest think everything is important, right? That's why you see I highlight or capital the 1 itself, because it's impossible that everything is important. You need to select 1 is more important. Which one is more important? So we need to understand which one is more important. Now I'm going to show you which one is more important. Before I explain to you, I'm going to let you know that technically your number 3 and number 4 is the most important thing. But if we are going to have one only, right? If you have a very good trading plan and a robust trading plan, you can solve more than 50% of your trading psychology issue. I repeat my statement now. Of these 4, technically 3 and 4, they are important. But if you have a very good trading plan, you can solve more than 50% of your trading psychology. I'm going to show it to you why I'm trying to answer in this way. Now, so at the end of the day, your trading plan is very important. But later I'm going to show it to you what is trading plan and why trading plan is so important. Now, training psychology, for example, what kind of training psychologies that we have? Training psychology meaning that if right now you sit on your chair, if you don't do anything, imagine you are not going to do anything happening in your body right now. Any activity or any thoughts in your body right now, they are considered as training psychology. So maybe you can understand better. I repeat. So if you don't think anything, you sit right now, you don't do anything happening in your body itself right now is something we call as psychology. So our psychologies encompass, like for example, stress. When you're having a trading, you have stress, definitely. Even work, we have stress. Fear, we have lack of confidence, we have anger, we have self-doubts. These are all the common training psychology. Then we have what if. This is the most common. Always we say, yeah, what if yesterday I bought this, then today I become a millionaire? Or what if I bought it last year when the market dropped, then today I'll become a millionaire? Am I correct? So these are all the training psychology. Now, when it comes to, before I really let you understand how to overcome that, right, we need to define one thing. When it comes to trading plan itself, now, first thing, we need to know that before we define what is trading plan, right, there are many segments in our trading, many segments. But I try to highlight those, a bigger portion of it, a big segment. The rest, you can go and read it by yourself. For example, we have trading methods, we have trading tools, we have trading strategies, we have many other things. So this whole things, this is what we call as a trading system. So trading system is like a formula. So later I'm going to explain what is this trading system. So when you plus from trading system plus yourself, this whole thing we call it as a trading plan. So technically, if you are looking at the formula, because people like formula, especially people who are in trading and investment. So technically, your trading system plus yourself, this is the whole thing called trading plan. But normally we stop at trading system is because yourself is very difficult for us to explain to you. You will know yourself better. So most of the time we try to skip this because you need to understand yourself. So the whole thing is your trading plan. So what is trading system itself is something that we are going to define in this particular section. Now, when it comes to trading, we have many challenges. Now, before we define what is trading system, we have many challenges or many questions that we are going to face with when it comes to trading. For example, what kind of trends is the current trend? Should I buy? Should I sell? Then entry point, what is my entry point? What is my exit point? What is my cut loss level? What cut loss level should I put? Then we have capital, how much capital I need to prepare, quantity, emotion. We have many things. We have stress, we have psychology issue, we have confidence issue. You can see that we have many challenges. These are all the challenges, common challenges that you are going to face. If we are not going to go through everything, even we are going to take one point, for example, entry point. Even entry point itself, you will find that you will face with a lot of challenges. I'm going to show it to you. Let's say, for example, when it comes to entry points, you tend to ask when to enter. This is like you always ask people, hey, should I buy? When should I buy? Then people tell you that, hey, there's a tips. This stocks is very good. Then you will tend to ask, hey, when should I buy? What price should I buy? How far can it go? So these are all the common questions. Should I long or short at this moment? You tend to ask your trainers. You tend to ask your speaker. You tend to ask the rest of your friends, hey, should I long? Should I short? What if I'm wrong? So you always tends to ask self-doubt. You ask yourself, hey, is it correct or not? Should I enter at this level? What if I'm wrong? What if I suffer losses? So you have a lot of questions, self-doubts. Then subsequently, losing money, what to do? If I'm going to lose money, where should I cut loss? These are the common questions that you tend to ask yourself. Making money, when should I take profit? If I don't take, then you worry that tomorrow you might not able to take. From profit until loss, then from loss until you suffered a huge losses, then only you cut your position. So these are the common things that you are going to face with. You never trust yourself, you have no confidence, you tend to ask around, you tend to follow a lot of forums, you tend to follow a lot of telegrams, and you always don't trust yourself. That's it. You trust the whole world except yourself. Sometimes you rethink about it, right? It's a joke, right? We tend to trust other people rather than ourselves. But in trading, supposedly we need to trust ourselves the most. But honestly speaking, in trading, we only trust one thing, which is your trading system, not even yourself. not even anyone, is your trading system. So later I'm going to explain to you what is trading system. Then you tend to ask expert first. You don't ask yourself. We start to read those buy and sell call, etc. Then you're going to face with this indecision as well. These are all the common, even with 1 point only entry point, you have this all common question. Hey, trust me, you go and rethink about it. How many questions that you suffered? This all. You look through, right? You'll find that nearly all the questions you suffered. Am I correct or not? So all these problems, you can solve it with one thing, which is what we call it as what? All the problems, you can solve it with one thing, which is what we call it as trading system. Now, so long as you have a very good trading system, the rest of the things technically you can solve. Even you can solve more than 50% with trading psychology. Trading psychology is important. Every area is very important, but it's just that if you have a very good trading system, you can solve more than 50% of your trading psychology. Now, the importance of trading system, before you really understand the importance of trading system, I'm going to ask you and try to explain to you what is trading system. Now, before that, I ask you a very simple layman question. What is a car? Some of you, huh? Why our sudden trading ask me what is a car? Now, anyone can explain to me what is a car? Now, I'm going to check with you. Now, is a wheel a car or not? Is your steering a car? Is an engine a car or not? The last one, is your car seat a car or not? So we still have many other parts. But what is exactly a car? So is the wheel a car? Is an engine a car? Is a car seat a car? Is the steering a car? You see, the car, the engine is very important. But if we have engine by itself, your car also cannot move. Am I correct? So technically, every part is important. Every part of it will form your car. So if I'm going to define a trading system in trading itself, meaning that we need many areas to form this trading system. So for example, I'm going to replace your wheel with technical analysis, your steering with fundamental analysis, your engine with trading strategies, your car seat with trading tools, and the rest. We have many other parts, like for example, trading psychologies, trading methods, etc. So the answer is, if we are going to define what is trading, which one is more important? Technical analysis is the most important. The answer is no. Fundamental analysis is the most important. The answer is no. Trading strategies is the most important. It is no. Trading tools, is it the most important? No. Because everything is the subset of your trading system. I repeat, all the areas here, they are the subset of your trading system. So at the end of the day, if you want to know, if you want to become very successful in trading, you need to have a good trading system, which encompasses everything, every areas. And this is the part that today I just want to kickstart for you to understand what is exactly futures. And subsequently, this series of webinars, we have different speakers. They are going to cover technical analysis, different speakers, they are going to cover fundamental analysis, different speakers, they are going to cover trading strategies, and different speakers, they are going to cover trading tools, etc. We have many other topics. So today, we just give you a kickstart for you to really understand futures, and subsequently, we are going to move in those intermediate class and advanced topic as well. Now, coming back to your trading system, so this is important. For example, part of the trading system, we have trading rules. For example, part of your trading system, we have trading rules. So let's say, for example, in Malaysia, we have traffic rules. So traffic rules meaning what? If you see green lights, you will know automatically you can go. If you see it is red lights, automatically you know that you need to stop. So this is some things that you know very clearly. But when it comes to trading, I'm going to check with you. Do you know exactly when you're going to buy? Do you know exactly when you're going to sell? And do you have the confidence to execute your buy position? And do you have the confidence to execute your sell position or not? So this is all about trading system. If you can build a very good trading system, then you have no issue about it. So like, for example, just now I mentioned to you, your trading tools, your trading strategies, your trading methods will form your trading system. So for example, part of it is also your trading rules. If in future we have any opportunity, we will be talking about this trading system itself. So you can see that training system will allow you to clearly define when you are going to buy, when you are going to sell, when you are going to cut loss, how much of money management that you need to prepare, etc. So you must have this training system in place. So at the end of the day, as I mentioned to you, we have different people. They are going to cover different topics. Subsequently, we have different speakers, those very reputable speakers in the industry. And just before I end, just for information that the whole series that you can see that every Tuesday, we will have different topics and encompass 3 different languages. And we kickstart with today the basic topic, and subsequently we have Mandarin and Malay topic as well. Those are beginners topic. Then, for example, 23rd March, we have this in Malay, Strategi Menjana Pendapatan Dua Hala Melalui FCPO. Then 30th of March, we have this topic, 为何期货是如今的潮流. This topic, right, we will talk something different from today's topic itself. So if you can understand Mandarin, you can join that particular topic. And subsequently, from 6 April onwards, these are all intermediate to advanced topic. You can see even we have automation or FKL trading using AI, very advanced topic you can see. So I cannot highlight everything in this particular slide itself. You can check out from our website and you can register to any webinar session that you would like to attend. We are going to organize this on every Tuesday from 8:30 to 10 o'clock. We have different speakers covering different topics, you can see. And this series, we call it as Let's Learn Futures, which is what we call as LLF webinar series. We are going to start with today, the first session, and subsequently we have different speakers covering different. Now, another thing that's more important, for those who really serious to kickstart, Busan Malaysia also organize online workshop. I think this is the first time you heard about online workshop, right? You're so used to online webinars, etc. But they have this online workshop. This is purposely for those really serious in kickstarting your futures trading. Now, and this particular online workshop will be longer compared to webinar, because webinar is your individual topics they are going to discuss. And this online workshop, we are going to cover from A until Z. So we are going to handhold you from A until Z until you can trade your futures. So the first online workshop one, we are going to cover about the complete guide for beginners to futures trading, mainly for execution purposes. For example, what type of order types that you need to use, what kind of validities that you have, how to buy, how to sell, and we are going to follow up with a trading simulation. Meaning, during the workshop itself, you need to buy and sell by yourself. And we are going to cover some strategies for you to understand. And the second online workshop, the workshop 2, is how to create futures trading plan and trading simulation. The same thing, we're going to cover everything, included your strategies, and we are going to follow up with your trading simulation. So through trading simulation, instead of putting money into the actual market and you don't even understand what is happening, you can test it in a simulation environment first. So I repeat the statement, you can test it out, you can simulate like a pilot. Before they pilot the whole plane, they are going to go through the simulation as well. And just for information, very important, you need to attend workshop 1 before you can attend workshop 2. I repeat, you need to attend workshop 1 before you can attend workshop 2. This is the requirement. You cannot go directly with workshop 2. Now, the upcoming session, we have 2 different sections. You can see group 1 and group 2. Group 1 meaning that you're going to attend on 24th of April, then subsequently you are going to attend on 25th of April. Group 2, you are going to attend on 1st of May, then subsequently you're going to attend on 2nd of May. So immediately Saturday and Sunday. Now, group 1 is from 9:30 to 12:30. Then group 2 will be 2 o'clock to 5 o'clock. So some of you, Saturday, you're working. So, or Sunday, you need to go to church, etc. So if you cannot make it for group 1, you can select for group 2. Now for registration, you can scan to register. Just for information, this whole series is brought to you by Bursa Malaysia. So you can attend this online workshop and all the webinar session for free. You don't need to pay anything. But for this online workshop, because we are going to very serious going into how to execute the trades and how do you trade, we only limit every session to 50 online attendees. So based on first come, first serve, meaning when you register, if you can successfully register, it doesn't mean that on the day itself, you can make it to the first 50. If you can't make it, then you need to join the next session. So if you are really serious, then only you go and register for this particular session. We are going to handhold you from A to Z for you to really understand how to kickstart your futures trading for FCPO, for FKI as well. So I'm going to sum up for my today presentation. Sorry, slightly past the time. Now, the first thing that I already covered is what is futures. We are going to cover the 5 areas, which is the definition, the terminologies, all the jargon used in the industry, the product available, then the underlying market. So in Malaysia, technically, we have 2 products. One is FKI, one is FCPO, mostly traded by retail. Then the last one is the contract specification. Remember, contract specification, you can get it from any of the Bursa website, and it's very short. It defines everything related to that particular futures products. Now, the second thing is I already covered the introduction of futures. How do you buy? If you anticipate the market is going to go higher, you buy. If you anticipate the market is going to drop, you sell. Now, how do you calculate your profit and loss? Every 1 point for FCPO is equivalent to 25 ringgit Malaysia, and every 1 point for FKLI is equivalent to 50 ringgit Malaysia. Then you calculate by yourself. Buy low, sell high, buy low. Anything opposite of this, you're suffering a loss. Now, the third part that I cover is the diversification. Remember, if you're only trading in stocks right now, please consider right now to add different correlation of products into your stock portfolio so that you can diversify your risk. At the same time, you can also increase your performance as well. The last one, which we cover about how to have a consistency in trading, you can use your trading system. So once you have trading system, you can generate a consistent in trading because you can duplicate your trades. So in future, if we have any chances, we are going to cover trading system, then you see that you can duplicate your trade easily. Okay, so these are the 4 key takeaway points. Now, before I end, my usual quote, successful trading starts with good trading habit. You are very lucky because Bursa Malaysia cover the whole session for you for free. But when you start, please make sure you start with good trading habits. And subsequently, if you have any question, you can follow us through our YouTube. We have many other education video as well. And also our Facebook, you can check with us any question that you would like to ask. So this comes to the end of my presentation. Thank you very much. I pass it back to you, Junior.
Wow, that was a fantastic sharing. Okay, now I will bring back my slide. A moment. Okay. So now we will start our Q&A session. But before this, if you have anything need to leave first, please help us to fill the feedback form. Okay, before you go, and you can also register LLF webinar session, upcoming LLF webinar session with this QR code. Okay, at the right hand side. So now I will start pick out some question. I see not much question here. Okay.
Not much.
So not
I
much.
can see many questions.
Many question. Wait
But it's okay. We'll go through the question.
Okay. So the first question is any correlation FCPO with currency movement or in indices? The currency like USD, MYR, CNY are the Chinese yen.
Oh, definitely there's a correlation. Definitely. This talk the fundamental futures I think coming soon next month, if I'm not mistaken. So the answer is only there's a correlation between FCPO and all the currency, because one of the fundamental is going to affect your FCPO price movement. One of it is your currency. So definitely the answer.
Okay, thank you. Then the next question is how to cut loss. How to cut loss if our buy contract against. This is how to cut
This is
loss
a
in short.
very general question, but
Yes.
just for information, to answer this, we need very in details. That's why we have certain topics that they are going to cover about trading strategies. But just to answer the question in a short or in a summarized version, for you to cut loss, the only things that you need to understand, you need to set your cut loss even before you enter the trades. I repeat my statements. Not after you entering your trades, then only you set your cut loss. You need to set your cut loss before you enter your trade. Why? Now, the reason behind is because I give you an example. Today, let's say, for example, before you trade or before you buy any contracts, right, your money is still with you. But once you buy any contracts, your money is already with your enemy. Am I correct? The other party, which is what we call as enemy. So when the money is with you, you do not have any emotion. So you are rational in a way. You're rational. When you set your cut loss, then this is a very good cut loss. But when your money already with your enemy and you start to going to set your cut loss, definitely this is not a rational decision. So the answer is, first thing, you definitely need to set your cut loss before you enter the trades. And you have many different ways for you to set the cut loss. And when you set a cut loss, it's not after you enter. You shouldn't set it after the trades. You need to set it before you enter the trades. So just now we are trying to highlight about the trading system, meaning that before you enter the trades, you have your whole full system already identifying what is the entry level, what is your profit taking level, what is your cut loss level, etc. So this you need to do it before you enter the trades, not even after you enter the trades. Okay.
Okay. The third question is FCPO Sharia compliance? There are sorting element there.
FCPO is definitely a Sharia compliance product, is already approved under Security Commission. In terms of that, you can go and check. This many of them, and it's proven that this FCPO is definitely a Sharia compliance products. The details one, subsequently, we have different Malay speaker as well. You can also check with them for them to explain to you. But I can confirm one thing is FCPO is definitely a Sharia compliance product.
Okay. I don't see any question anymore. Okay.
When you send the question, right, make sure that you send to co-host. Don't send to the host. When you send the question, remember at the bottom there, beside your chat, then you can Q&A, then you ask your question in the Q&A. If you ask it in the chat box, right, we will not able to pick up. So you can continue to ask in the Q&A box, then we will answer your question. Meanwhile, while waiting, maybe Junior, you want to run through the slides while waiting for them?
Okay. So.
Or else, it's okay, Julian. There's next question. Maybe you go back first. Last 5 minutes, we will continue with that.
Can.
The next question. Can you
the
see
next
your
question
side?
is there? Hey, wait. Will there be a recording of? Yeah.
No, I think it's one question above,
what
right?
are the best requirement minimum margin to start starting capital?
Oh, sorry, I picked up one question before that.
Before that.
Is correlation between FCPO and soybean oil in the US? Definitely, you can see that similar to Dow Jones, our FKI will be impacted by Dow futures as well. Then FCPO, definitely the closest products, complement products will be soybean oil. So there's a correlation between FCPO and soybean oil. This is definitely the answer. Then what are the best requirements? Recording session, The next question is it? Your
Yes.
side is the
Yes.
recording, right?
Yes.
I can see. A recording session, you can go through our YouTube channel. You can get the recording session. For this LF session, we are going to have the recording for our YouTube. Definitely, and we will put up for the recording. The next question was like,
Yeah, the next one is what are the best requirement minimum margin to starting capital?
oh, very good question. I don't expect this kind of question for the first session, but technically, for example, if you are going to trade one FKI, you can start with 4,200. Right now is the margin required. And for FCPO right now is 5,005. But when you are going to add into your strange strategies, then the answer is slightly different. But just as a basic for you to start, you just need to understand that one contract for FCPO, if you want to trade, the required margin is 5,500, and for one FKI is 4,200.
Okay, the next one is how do we view the soybean prices in US and China?
Well,
I
you
think
are
it's trade
asking,
war lah.
you're asking a very far question. Technically, the soybean oil and also those traded in US itself and also China. One is you go to Chicago Mercantile Exchange, CME. That particular part, when it comes to fundamental trading for FCP, we are only covering those. But for understand, you can go and check Chicago Mercantile Exchange. They have these soybean oil prices. Then for China side, they have the Dalian Commodity Exchange. We call it as DCE, Dalian Commodity Exchange. So you can check for that. So maybe we are going to answer the last question. Then we need to continue with the rest. Or else maybe are you going to move to the
The
feedback
next slide.
form?
Okay, can.
Yes.
While waiting, we move to feedback form first. Okay, so this is the feedback form. You can just scan this QR code and help us to fill in the feedback form lah. Or you can find it, I think, in chat room also got the link. It won't take you too long, just a few minutes, 1 minute like that.
If you please
Hello, team.
you can click with the link. You can click on the link.
Okay. Hello. Oh, got one more question coming in is what is the best broker we have in Malaysia?
Julian,
hello.
maybe we
Yeah.
let them finish the feedback form first.
Okay, can.
Later, we are going to answer the rest of the question, but just take about 30 seconds to finish the feedback form. Then we are going to continue to finish the rest of the question. Last 30 seconds.
Okay. Okay, I think time's up. Okay, can?
I think they already finished. Junior, you can continue.
Okay, so I just proceed. So the last question is what is the best broker we have in Malaysia?
Brokers wise, we have no preference. Technically, Malaysia we have about 20 brokers. You can go through Bursa Malaysia site, right? You can go and check it out. So you can check which brokers it will suit you in a way, so you can check it out by yourself. Junior, can you continue with the slides?
Okay, can. So our upcoming Let's Learn Futures webinar series is conducted in 3 languages, English, and Mandarin, every Tuesday. So you can see here, got English, Bahasa Malaysia, and Chinese. So you can just scan the right side QR code to register, or you can just click the link to register. Okay. Okay, so after you click the link or scan, it will redirect you to this page. So you can see the calendar, then you just pick on the Tuesday one. On the Tuesday one is LLF, so you can just click the topic you are interested. So the next one is if you wanted to move to the next month, so you can just click this highlighted red box. So you can see here got April. So you after you click it, it will show you event for April. Okay. So also same, you just click at the topic you are interested. Okay. For this, we also have online workshop for LLF. We will conduct this online workshop in English, Saturday and Sunday. For April, we will start from 9:30 a.m. to 12:30 p.m. For May, we will start from 2 p.m. to 5 p.m. This for who are interested, really interested to venture in futures trading. So you must attend this. So you can just sign up with scanning this QR code. And we also limited to the first online attendees. So first come, first serve. Okay, also same. After you scan, it will redirect you to this calendar. You will just click the topic 24, the 25. Okay. Thank you for your participation tonight. Thank you.
We are going to see you in the next webinar. So bye.
Okay, bye.